What is quantitative easing and how does the Bank of England use it? Imagine a time when traditional ways of boosting the economy just aren't enough. That's when central banks like the Bank of England step in with a special tool called quantitative easing. This method helps keep the economy moving when interest rates are already very low or cannot be cut further. Quantitative easing involves the Bank of England buying large amounts of financial assets, mainly government bonds, from banks and financial institutions. When they do this, they pay for these assets by creating new money. This new money then goes into the financial system, increasing the amount of cash available. By buying these bonds, the Bank of England pushes down long-term interest rates. Lower interest rates make borrowing cheaper for businesses and households. When borrowing costs are lower, people are more likely to take out loans, invest in new projects, or spend more on goods and services. This increased spending helps to boost economic growth and move inflation closer to the Bank of England's target, which is usually around 2%. Quantitative easing can also lift the prices of other financial assets like stocks and corporate bonds. When these assets become more valuable, people who own them feel wealthier. Feeling wealthier often encourages more spending, which supports economic activity. The Bank of England has used this policy during tough times, such as after the global financial crisis in 2009, during the Brexit referendum in 2016, and at the start of the COVID-19 pandemic in 2020. In each case, the goal was to stabilize the economy, support markets, and keep inflation close to the target. Quantitative easing isn't meant to last forever. Once the economy recovers and inflation stabilizes, the bank can reverse the process. This is called quantitative tightening. It involves selling the assets it bought or letting them mature without replacing them. This reduces the money supply and helps interest rates return to more normal levels. From the perspective of controlling inflation, quantitative easing helps the Bank of England influence what people expect future inflation to be. When people believe the bank will act if needed, their behavior, like setting wages or prices, aligns with that expectation. This helps keep actual inflation steady and close to the target. In simple terms, quantitative easing is a way for the Bank of England to support the economy when normal tools aren't enough. It encourages spending, investment, and helps keep inflation on track, all by carefully managing how much money flows through the financial system.